I would like to cordially welcome you to Private Banker International's Global Wealth Summit 2020. I am Patrick Brusnahan, editor of Private Banker International, and heartily welcome you to this virtual conference where we'll be discussing the state of the market across the private banking sector and the turbulent times for many industries. Please make sure to check out everything on Hopin, including sessions, stages, and networking. So, with a lot of features there for you to check out during the conference. And don't also remember to check out the awards to see if your bank won something. Is Rohit Bhuta, the CEO of Crossinvest. Rahim Daya, Head of Private Bank UAE at Barclays Private Bank. Rajesh Khanna, SVP and Head of Global Coverage at Emirates MBD Private Banking. And Mark Hirst, Deputy Group CEO, Private Banking and Wealth Management at Ahli United Bank. Thank you everyone to the panel for being here. Huge topic, I know, state of the market, how to ensure business continuity. I'll start with Rohit and then we'll take it one by one. What have been the greatest hurdles to ensure business continuity in a time of such, turmoil, such so many changes? What have been the biggest hurdles, Rohit?
Look, it's a very interesting question. Look, this is unprecedented. What we're faced with right now is completely unprecedented, right? If this had happened maybe 10, 15 years ago, I think a lot of businesses would have really struggled. As luck would have it, we are, I believe, in a situation where the technology to enable businesses to function from home and offsite has always been there.
Yes.
The technology like Zoom and Teams, it's always been around. So all that's happened is as a result of us being forced to be away from the office environment, we've been forced to start using technology that's been around. So that's been a blessing. If we had been in a situation where we did not have this technology, I think most businesses would have struggled. So on the one side, that's functioned really well. So the teams, the team bonding, the videos and having collaboration with our team itself has gone really well, at least for us. Where the disruption has occurred, in my view, is our inability to actually have a face-to-face with our clients.
Yes.
So on the one side, we've been able to hold meetings via Zoom and other channels and other means on a regular basis and kept them up to date. The actual touch, the human element, which is required in the ultra high net worth space, in my view, that was lacking, right? And also, I think the other disruption has clearly been the inefficiencies that come invariably and inevitably with working from home and not being in an environment where you are together. In Singapore, we had a circuit breaker for close to 3 months.
Yes.
There was testing at the best of times. But for the reasons I mentioned, the technology being around, and for us in particular, we have always been on a cloud-based infrastructure that enabled us to actually continue business as usual. It introduced a number of inefficiencies. And every time there was an issue, for example, we were very quickly able to get together and address it. But this disruption is bound to continue, I think, for the next 6 to 9 months, and however long it takes before the world sort of gets back to some sort of a normality, right? And we're learning as we go along.
Rajesh, do you have a similar experience?
So Patrick, at our end, also, we have had similar experiences, what Rohit just echoed. One of the things what COVID has taught everyone is that, we all know that we are living in a tech-led world, but what has happened during the time of COVID and post-COVID is that there has been faster adoption of technology. And we see this across all firms. And I can talk specifically about the firm where I work, Emirates MBD, that thanks to our senior leadership and to the IT department, that we were very, very quick to display that agility of moving from a normal setting to a work from home sort of a piece, where like, we had situations where like, within 15 days, we had something like 600 laptops given to people in different departments. They were enabled very well. The technology was working fine. And that's how the whole journey started. One good thing that I have seen is that, while in this setting, we were not face to face, but, the employees displayed excellent, commitment and, long working hours. So what that resulted in that, obviously there was a paranoia on the client side because of the situation, and also the markets weren't helping at that point in time as well.
Sure.
But our continuous engagement with the client on a virtual basis gave a lot of relief and comfort, because hand-holding at that point in time was very, very important. So it worked well for us so far.
And Rahim, you're at a similar sized bank, a huge multinational. How did you find keeping continuity? What were the challenges there?
Look, thanks, Patrick. I think you've heard the main points. I think for us, I mean, Barclays obviously has lots of people globally. I think within weeks, within weeks we had, I think, somewhere around 70,000 people working dynamically, right? So it's a huge number. And as the guys have already said, this isn't new technology that we waited to be rolled out. It was already there. So the speed of execution when it's unplanned is incredible, right? So all of a sudden you've got people working regularly from home, from other locations, but kind of internally aside, if you think about our market and our business, we're seeking, as the guys have said, we are regularly used to being in front of ultra high net worth billionaires in the region. Now for Barclays, they are using us for offshore investment. So typically they'll be used to speaking to bankers and specialists who'll be flying in and out of the region, meeting clients, talking them through their portfolios, particularly as the markets got choppy. The bit for me that was most kind of remarkable was the fact that clients adopted the new technology incredibly well and very, very quickly. So previously a very live challenge would have been trying to get hold of a client, right? Because these guys are flying around all over the world. They are busy. They have jam-packed days. All of a sudden, everyone's available. Everyone's available because they can't go anywhere, right? People that have been used to being on planes every week for the last 20 years, all of a sudden are stationary. And with what's happening in the markets, they were ever more engaged in their portfolios and their performance, looking for ideas. And they had access to the full suite, right? Because through channels like, we use, WebEx a lot, but there are lots of platforms out there. We're able to still bring the guys who run the money in Switzerland or in Geneva on a call with the client and talk through performance and talk through investment themes and ideas. So for me, I get the internal bit, and that was, excellent. But seeing clients adopt it in the way that they did, and they continue to do, is brilliant. I think our challenge is still to come. I think our challenge in terms of how we originate and meet new clients is going to be harder, because without being able to do that face-to-face, first or second interaction, it's very hard to kind of win trust. So, and I think that's still to come.
I'll address this to Mark, but anyone can jump in with an answer if they have something. Everyone there talked about how quick the firms had to adapt, but banking isn't necessarily known for it being the quickest moving sector. Was it a change to adapt as quickly as you had to for the sake of the company and for your clients, Mark?
Yeah, definitely it was a very quick adaptation that we managed to achieve. I think that was across the whole industry. I think we managed to adapt. Many of the panels mentioned that the technology enabled that adaptation quickly. I think the real thing is back to the points that Rahim and others have made, is that personal connection.
Yes.
And we have an advantage that our clients often come into our offices on a regular basis because they have their local businesses here to support. So that has a big advantage that we actually see them on a regular basis, because we're doing both offshore and onshore offerings for them in terms of lending and elsewhere. And we really get to see that in terms of their business profiles and the things they can do. But we did have to adapt. Often clients actually come into the bank as a sense of security as well, in the sense of making sure that things are still working for them and that they feel secure in terms of the environment they have. And that also reassures them, because we have an open booking platform, so they can service their London account from their Bahrain office in terms of what they need to do. And that also gave them that reassurance that they had a relationship manager that could deliver that to them locally. And that's something that we'll continue to adapt going forward, I'm sure.
Because all the banks have digital plans, you know, pipelines. Did any of you accelerate your plans? You're always going to go this digital, but COVID actually made it, we have to do it now rather than 5 years from now. Anyone could jump in for that. Did it accelerate your digital plans?
Yeah, we definitely we have accelerated and we continue to accelerate. And even today, one of the challenges to all my team is look at everything that you do and every process, and can it be digitalized in any manner? And all of a sudden a piece of paper passes across our desk. And actually I've been here in the office apart from 2 days during the whole pandemic, and most of our staff are back 80% full-time. We're not doing rotations. So that's also, we really started to look at every single process and challenge colleagues to say, do we really need to do this, and can we not do it electronically? And our third-party suppliers as well at all points. And particularly in the Middle East, I think it's been a culture where often you look for signatures, wet signatures at every point, and that is changing now, I think, with the pandemic, and we need to take advantage of that.
For us, I think I'm probably the only one on this panel that does not represent a bank. And the advantage of being sort of younger and a non-bank financial institution is that we were quite ourselves advanced so far as technology is concerned. So portfolio management system, our trading systems and stuff, you know, it's state of the art already. What we were lacking was our inability to, or the banks, the custody banks' inability to speak to our systems. So it is good that I'm hearing that the banks are probably accelerating their digitization programs, because that'll help us. And then I think we might actually be on an even playing field as far as interactions between systems are concerned. Right?
Yes. So we've talked about keeping the connection in this way. A lot of clients have accepted the new digital interactions and everything like that. Is there anything else about the clients have changed? Have they, now that they've changed the way they interact, have they changed their targets? Have they changed what investments they want to do? Have you seen any difference in client behavior in that way? I'll start with Rajesh. Rahim, sorry, go on.
Sorry, Patrick. Look, we found, like, I think a bit like I was saying, you know, all of a sudden you've got kind of time poor clients having a bit more time. Right. With a lockdown, they've got more time to read now. Predominantly, particularly in the early stages, that reading was about what's happening from a COVID perspective, right? But as the time went on, as the weeks went on, they became very engaged in what portfolios they hold. They were there and ready to hear new ideas. You know, obviously the market has seen you know, clients in our segment take a larger position in gold and silver over time. They've looked to get well diversified. I mean, our mantra is pretty straightforward. Stay invested, stay active, and always be diversified. And I think our clients, while they knew that was the case, they were always looking for new ideas. The other thing that they continue to be interested in, particularly from this region, is acquiring real estate at a potential discount. So we saw interest in UK real estate and south of France real estate increase as well over this period. So we saw clients as active and even more interested with the time that they had.
Do you notice the same thing, Rajesh?
Yes, I completely agree with what Rahim just mentioned. In our side, we are saying just because clients have got so much more time at their end, we are seeing higher degrees of engagement. We are seeing more portfolio actions being taken, discussed with the advisors. And I can give you one very interesting data point that just because the clients have got so much more time at their hand, we have seen like our trading volumes have gone through the roof. Like, you know, the number of trades that we used to do pre-COVID and now what have we been doing over the last 3-4 months, it's a dramatic increase. And the answer is very simple. I'm just sitting in my room. I have to do something, right? I cannot go out of my house.
Mark, have you seen a more savvy, more proactive clients?
Back to what Rahim mentioned, we've seen a lot of activity, particularly in the UK and elsewhere, where clients want to diversify well, particularly real estate as well. Very active, always wanting to look for a bargain. Our clients are always after good discounts and bargains. I think that's always true. And I think they want to take advantage of those things now. And that's the ability that they have. Provided, obviously, the underlying, and this is where I would see some of our clients differentiating. The ones that are being successful in their underlying businesses are creating their wealth, they are a lot more relaxed than the ones that are firefighting because of COVID, etc. I mean, if you've got people with lots of hotels and people with lots of restaurants, they are struggling at the moment, and that's where their focus and attention is, to preserve the future wealth that they want to create. And so we're seeing all those extremes coming through, and that's the balance of, and sort of back to what many of people have mentioned, meeting clients and understanding them, and also extending help where it's needed. And that's what we've done in many cases for the right kind of clients. You have to, during moments of crisis, go the extra mile, be that on the lending, be that on the margins and elsewhere. And you have to recognize that you're building long-term relationships with your clients, not just for the next quarter's transactions. And that's what we want to try and achieve.
Are investors being more careful in time like this, or do you think maybe there's a bigger chance of a higher return and being more adventurous? What do you say, how the scales have gone?
From our perspective, I think, Patrick, we've seen a couple of things. So I think, you know, what's paramount, I think, to our segment over the next few years is wealth transfer.
Yeah.
So you see lots of next gen families, you know, kind of set up, and you see at particular points like this, you see, you know, I guess, you know, differing opinions, right? You've got the first gen with a view on how to manage crises, as they have done for, you know, decades, and you've got the you know, the next gen, you know, typically Western educated, you know, trying to do things that are a bit more funky. So actually seeing that conversation come together is, you know, is extremely insightful. I mean, we have, you know, quite, you know, a broad next gen, you know, kind of offering from an advisory philanthropy perspective, but also seeing that dialogue, that quite rich dialogue between the, you know, between kind of first and second gen is very interesting. And I think wealth transfer is going to be continuing to be a theme for the next decade or so. But, you know, during periods like this, you see specific interest from, you know, the kind of the first gen on the next gens.
Yeah. Are the next gen getting more proactive? They're getting more involved than previous? I suppose that's a question for anyone. What are your thoughts on intergenerational wealth transfer? It's a big moment at the time right now. Are the next gen getting more involved?
Well, definitely the next generation are definitely getting more involved. And just picking up, I mean, I definitely think we've seen more interest in our wealth planning solutions, both onshore and offshore. People thinking about the structures they have in place and what they need to do to protect their wealth going forward has really come, you know, logically to the forefront of their attention and the things they want to do. But as you mentioned, the next generation wants to be actively involved and understand it, which hitherto they were maybe not. They left it to their parents to organize those things. But nowadays it's much more active in terms of thinking about the planning, the implications of those things, and also the investments as well. Absolutely.
Rajesh, are you seeing similar?
Very similar, and this is also one of the, you know, key focus areas for us in the private bank.
Yeah.
And what we do, and what we also want to do, like, you know, scaling up this idea and taking it further, is that, you know, we also have, you know, a pool of marquee UAE families who are, you know, who have been into, in business for several decades. And, so we are engaging with their siblings. We are working on, developing programs for them in the private bank where they can come and get, exposed to different areas. So we working very closely with the investment advisory team, or working very closely with the CIO office, learning the ropes on the operation side. So idea is that, if you start interacting with them early, because they are the future heirs. So idea is to catch them early, engage with them, because ultimately, they will be taking decisions tomorrow.
Yeah. Is it the case that if you get them now, because people's first bank is often their last bank, you want to get the relationship early?
Absolutely. Absolutely. Yeah. I mean, I will give you a very interesting data point. Like, my general manager private bank told me day before yesterday that, one of the very prominent names, very well respected names in the market here, called him and said that, how are you doing this? I want to understand, and please come to my office and make me understand how you have done this. And I would want you to teach this to my son. I mean, this just happened less than 48 hours back, and similar themes. So all very interesting things you are sharing with your clients, and obviously there are a lot of interesting trends within the UAE families that we see emerging. We clearly see that there is a gap in terms of succession planning. And we really, as a prominent local bank, we really want to play a key role on this side.
Rohit, are you seeing more and more? Sorry, go on, Rahim.
No, I was just going to say, so it's a very interesting point. I think on the UAE side, I see a mix. I see some very, very well-established families with very, very well-established plans. Right, they've got family constitutions in place. They've gone to some degree to plan for this. Others haven't. But there are also some very interesting data points in the market, and I guess the next 10 years we'll see. But there are some data points out there that say actually perhaps the vast majority of the next gen will change their banker, right? Because the way that it was done for the previous generation may not be the way that they want to continue.
Yeah.
Because it's a kind of ongoing view. Well, we've always done it like this. We've always liked equities over fixed income, for example, or we've always liked cash, right? That's the kind of classic one. And there are various surveys being undertaken today that kind of prompted a different view. So kind of the first bank, last bank, I think view is certainly up for challenge now.
Rohit, are you seeing the next gen getting more involved with investments?
Yeah, thanks, Patrick. I was going to say exactly the same thing that Rahim just effectively said, right? Look, the difference between I think the regions where you operate in and Asia is that the wealth is relatively new in Asia. It's new wealth that's been created over the last 10, 15 years. Not all of it, a large percentage, right? So what effectively is happening is next gen is getting involved, definitely, and the intergenerational transfer is being talked of, but it's not old family money. This is people in their 50s and 60s who have just who are now billionaires, right? So they're not necessarily ready just yet to actually say, yep, okay, I'm going to give it over to my children. And I'm also finding the next gen in Asia in particular, their investment philosophy is very different. They are primarily the millennials of this world, right? So they are more digital savvy. They're natives of technology, right? So for them, having a relationship, a meaningful relationship with the private banker, for example, may not be as important as it may have been for the parents. So the dynamics of that interaction is changing and will change. So we have situations where we actually do different things for different people in the family. For the patriarch or the matriarch, it is the normal traditional philosophy of investment protection, steady growth, And then for the next gen, it's effectively going and finding the private opportunities that's out there, the unlisted private opportunities, whether it's real estate or Series A to pre-IPO or Silicon Valley type opportunities, which is what's exciting them right now. Yeah. So the dynamics are changing. The other thing that I would say is Singapore, has categorically gone out and unashamedly said they want to be the Switzerland of Asia. So in the last 3 to 5 years, they've actually introduced a number of quite attractive schemes for wealthy families to come in and establish their family offices in Singapore. So in the last 2 years, we've had a flood of new families coming in, incorporating their family offices in Singapore. Right? So I think there is going to be an underlying attraction of large families coming into Singapore, making the most of all the attractive packages that are available, which will enhance the entire funds management industry and the private wealth industry, I think, across Asia. Right?
And with the newer generations operating differently, maybe wanting different forms of interaction, do they also invest differently? Are they more into, the stereotype is younger investors are more into ESG, things like that. Are you finding that, or is there ESG just getting more popularity across the board?
Oh, look, I think it's across the board. I also think the younger generation, the next gen at least anyway, they would rather go into an algorithm-driven strategy and try and sort of make their own decisions rather than actually sitting down and having a meaningful conversation about everything else but investments, and then talk about investments, right? So they are, pretty much very, very quick decision-making processes. The ease of making investment decisions, ease of transacting and executing is very important, right? So that we're definitely seeing. Now, I do see, and I've seen this a number of times now, you're talking about ESG, there are children who have effectively said, okay, well, the matriarchy, keep doing what you're doing. I will focus on the ESG side of things, right? So that's certainly something that's happening. The other thing that I have actually observed is in the past, ESG was seen to be something that is an alternative, and you have to forego returns. Now it's becoming almost mainstream, and you don't necessarily have to forego returns. You could almost sort of get the similar returns as sort of mainstream without the ESG, right? So I think going forward, we will see a lot of investments that are sort of ESG focused in any case, which will become mainstream.
Are people seeing that? Did anyone have to convince their clients that ESG was actually making a return now, or were they very happy to go with it?
It's very popular. It's been popular for some time. I mean, last year at the annual kind of Barclays Private Bank event that we do here towards the end of the year, our theme was, I mean, we talked about an outlook for the year, for the upcoming year, but otherwise we had two speakers talking about, they were quite broad ESG themes, right? One was water and the other one was energy. So, clients have been engaged in the topic for some time. I think the challenge has been, how do they get into it? I think that's where banks have been lagging a little bit. But over the last kind of 5 to 6 years, we've seen clients kind of take it on board. There's, we don't really have the debate around, is it a good investment? It's more like how and what do you have to offer?
Right.
Sorry, Mark, you were saying.
No, I completely agree with you. I mean, I think the thing is that it is now more mainstream. It's a conversation, particularly with the younger generation in terms of those. And they're very quick to make decisions. And I think this is also, their attention span has changed in terms of their thought process. They move on quickly in terms of once they've decided, and then they're very committed to it. And they don't want to be taken off into a different direction. Once they've decided this is the direction they want to make their investments, they're committed and they go to the end. And I think that's also a psychological change with this generation as well, in terms of the way that they think about it, in terms of what it is.
And sorry, Mark, if I may, the other thing that I am seeing that there is a change is, in the past, clients in Asia, at least anyway, they were reluctant to pay fees, for advice per se, right? And as a result, I think in Asia, at least anyway, we are in a situation where most of the private banks work on a transactional revenue basis. I'd go as far as saying, most of the banks would have close to 80% of their revenues coming from trading rather than recurring fee environment, right? With the next gen, the core difference that I see is that as soon as they see value in what they're getting through advice, they're fine to pay a fee. You don't have to sit down and try to justify why you are going to charge a fee for the advice that you provide, right? At Crossinvest, 90% of our revenues are recurring. We charge a fee. Clients who say just transactional, we say that's not us, right? So we've categorically decided that that's not a proposition that we want, right? But increasingly in Asia, we are seeing clients are actually agreeable to pay a fee when they see value.
I completely agree with that, and we've seen that across our offering, both investment and even on when we renegotiate loans or other things. For good advice in terms of fees and well-structured things, people are happy to pay fees in terms of those things, and they don't quibble about it, which they used to in the past, right? And I think that's just part of what they expect in terms of overall.
And one thing I wanted to get to before we finish our discussion, building and retaining a skilled talent base at your firms. Has that been an issue recently with, the job market in most sectors is quite up in the air at the moment, but how have you been managing to retain your talent at each of your respective firms? Has there been any issue at all? Or has it been fine? Is the talent pool shrinking? Is it growing? Or Rohit, we'll start with you. How do you build and retain a talented skill pool within your company?
The issue is, I think, getting the talent in the first instance, right? And now I've been saying this for a very long time. I've operated in Asia now close to 10 years. Unfortunately or fortunately, the way the private wealth management industry has evolved in Asia, like I was saying before, it's been very much a push environment. So most of the relationship managers that are employed in the financial services sector are encouraged to actually be salespeople. So when you are a salesperson, first and foremost, that is your driver is how much revenue am I going to generate and how much revenue am I going to generate for the institution, and in return, how much bonus am I going to get, right? And I'm generalizing, and please forgive me for that, but that's by and large, the modus operandi here, right? So if with us, we are very different. We advice focused. So to actually go out and get talent from a very limited pool where people do understand advice, one, to get them in, and then secondly, to actually make sure that they're able to operate efficiently and productively in an environment where clients are sometimes not willing to pay for a fee or value advice, right? So to answer your question in a very long way, once we actually find talent, we go out of our way to ensure that they stay. And in order to do that, we build a culture of togetherness and collaborative environment. And because once they realize, the advisors realize that we are offering a proposition that is best for client, tailor-made for the clients, we remove all conflicts of interest. We're completely transparent and we provide full disclosure, and the clients start valuing that. Our team know that the clients are not going to go, and I know that my team won't go either, right? So it's a win-win as far as I see, right? And I continue to build that environment.
Yeah, Mark, Rajesh, Rahim, is it hard to attract the talent to a big traditional dusty bank compared to the exciting world of fintech and startups and everything like that? Have you found it difficult?
So Patrick, honestly,
all of us.
Sorry, Rahim, please carry on.
Go ahead. No, go.
So Patrick, to be very honest with you, finding the right talent in our business, it's not very easy these days, right? Because if you look at the average span of the banker in any organization, it would range between 3, 4, 5 years to 6, 7 years. That's the maximum range that you see, right?
Yeah.
So to find bankers who really think of running a marathon and not a 100-meter dash. It's very, very difficult. Once you get the right, individual with the right skill set, who he or she is able to, gel well with the culture of the organization, which is so very important. We as an organization always map the journeys of all such individuals to understand exactly what your skill set is, what kind of, skill set honing that is required from the bank side. And then we do the mapping very diligently to see that what kind of trainings that have to be imparted to you, whether it is technical, whether it is soft skills training, whether it is internal, or whether it is like sending you for some external programs. We work very closely with top-notch business schools. We work with a lot of the industry professionals who also then get nominated to do some sort of mentoring for some of the people who are part of the talent pool. And this is like a journey that we undergo with every individual. There are certain people who require more hand-holding, so we stand committed on that part as well. But having said that, the moot point here is that people generally tend to be a rolling stone. They're moving from one place to another. They are not looking long term, because this is a type of business where clients also like and they love longevity, right? They like sustainability, that you have been on a platform for many years, advising them, and being with them through the thick and thin. So it's a tough journey. I mean, the way I look at it, in my bank, when we started, we are a young private bank, almost around 12 years old. When we started the journey, it was so very important and was so difficult for us to even convince somebody to join our platform, because we were very new. Today we have reached a stage where a lot of the international private banks are eyeing local bank resources. So things are changing. It's obviously difficult because on the compensation scale, we look things very differently, because we are a full commercial bank and not a pure private bank play. So many a times, it is challenging for us to retain talent.
I agree with what Rajesh just said, because we're the same in the sense of a commercial bank, part of the private bank's only a small part of that overall.
Yeah.
And we rolled out, actually during the pandemic, we rolled out our e-learning academy as part of that. And actually that helped a lot of for the relationship managers and the client service and product team. So we kept everyone in a similar program. We launched a new leadership e-learning program as well, to ensure that the leadership at the team leader level and at the section head levels are well developed in terms of, because when you're working remotely, and this is also something we didn't touch on before, it presents new challenges in terms of how you lead your teams and how you engage with your teams and ensure that they are motivated, and what are the things that you would normally do in a work environment that you now have to think about in a different kind of way. So all these things play into the types of skills that you need to enhance as you work through. And I think that this is going to be a new working environment as we move forward, and we're going to have to adapt our leadership skills to ensure that we can cope with many more people working remotely and in different manners going forward. And so I think it is a challenge, as Rajesh mentioned, in compensation and the pure play. But I think a lot of our staff actually value being part of that long-term relationship with clients, and they see it, and they also see it in some of the individuals that have remained with us for over 15, 20 years in the private bank, servicing the same clients, developing them, and doing well in the organization. And we have to celebrate those individuals as well as the high-flying new individuals who join.
I think, Patrick, from my perspective, there are two things I'd say. One, I don't think any of the members of this panel is short of receiving CVs. Right, the market is full of people willing to flick their CV across to a head of a bank and say, I'm a great guy. So I think there's a lot of supply in the market. I think the challenge around recruiting talent is a little bit about making sure that they're a bit more surgical recruiting rather than kind of en masse or kind of hit and hope exercise recruitments. I think the part around talent internal is often we think about our biggest producers or our frontline staff only. And I think often it's really important, particularly in years like this, that we continue to drive talent through the organization, even in the more junior roles. So ensuring that the promotion process is still run for junior staff to make sure that the whole, because right now the contribution that you see from the full suite of people is incredibly high, right? It's not just down to people that are out there seeing clients and meeting clients, even if that's now remote. So I think making sure that internally we're focused on all levels of the organization is also going to be paramount.
Well, it's a topic we could talk about for hours. I mean, the state of the market is a huge issue, isn't it? But unfortunately, we're out of time. I'd like to give my thanks to Rohit Bhuta, Mark Hirst, Rajesh Khanna, and Rahim Daya for their time on this panel. Thank you very much, gentlemen. For the next session, please go to stage 2 on Hop-In. I've been Patrick Brusnahan. Enjoy the rest of the conference, and thank you to all of our speakers in this panel.
Thank you.
Thanks, Patrick.
Thank you, Patrick.